Hello, I'm Richard Murphy, and I want to talk about inflation. Now, you can see inflation in two ways. It's either a general increase in prices, or it's a devaluation of a currency. In other words, you can buy less for each pound that you have. It doesn't really matter. In either case, people feel that they are worse off because the value of the money that they have has fallen. Is that likely in the near future? The financial markets are suggesting that it is, and my suggestion is that it isn't. Why do I think that? First of all, because long-term trends in inflation are strongly downwards. The current prevailing average rate is around under 2%. That's likely because this has been the trend over not just decades but centuries, and I don't see that changing. I don't see interest rates changing either as a consequence because I don't think inflation is going to rise, and the two are very closely related. Why don't I think inflation is going to rise? Because only three things are really going to create inflation. One is a shortage of supply of goods in comparison to the amount of money that there is. Now, there may be a shortage of supply of goods when we reopen after coronavirus because lots of people are going to want to buy some very specific things like holidays. But in general, the economy has managed to meet demand over the last year or so. I don't see that changing. So I don't believe that's going to be an issue. Do I see there being a problem with regard to Brexit for this reason? Well, obviously that is a risk and the government knows it, so it's breaking international law to make sure that goods can still flow into the UK. As a consequence, do I see that creating a general supply shortage? No, I don't. So the alternatives are that there's an increase in the amount of money chasing the available goods, which is an inappropriate increase because there hasn't been an increase in productivity to justify it. Well, there are two reasons for that. One is general wage increases in advance of the increase of labour productivity in the economy, meaning that we haven't earned those increases. And look, there's no sign of this at all. The nurses are being offered 1% when I don't know a single person on earth who thinks that's fair. Other public sector workers are being offered nothing, and that's because in general it's considered that private sector workers have seen no pay rise. So is there any risk of wage-driven inflation at the moment? No, none at all. So what else is there that could create inflation? Well, the only thing that is talked about is the fact that over the last year, because the government has been pumping money into the economy to make good the shortage of money that would otherwise have been generated in the private sector, necessary to literally keep the economy, UK households and UK businesses going, but nonetheless of extraordinary amount and wholly unprecedented before, that pumping in of money into the economy has created new savings. At present, it's thought that that sum is in excess of £250 billion, of which about £100 billion is in mainly large companies, but not smaller ones who've needed a lot of financial support to keep going, and in households where it is thought that at least £150 billion of extra saving is being retained. I suspect it's higher. Now, not every household has benefited, of course. 25% of households are much worse off because of COVID. Many have just held their heads above water, just where they were. But some households are massively better off as a consequence because people have been able to work, they've saved a lot of money, they haven't been spending, and so on. In addition, asset prices have gone up. Just look at house price increases over the last year or so, and you will see that stock markets have not suffered either. So the result is that there are very many wealthy people who've got a lot of money, and it is the assumption of some people, particularly in the Bank of England, but also in the UK Office for Budget Responsibility, that those people will go out and spend their gains in a mad flurry of expenditure, which is going to last several years to make sure that all the angst of the COVID years are washed away by a consumption, absolute, mayhem of spending. Is that going to happen? No. Why is it not going to happen? First of all, because the rich can't spend all they have. That's why they're rich, and they've already got all they need. And we know that because they put money aside despite spending more than the rest of us. So why are they going to now suddenly begin to dissave, which is the logic? They aren't. Are the rest of us going to dissave or literally start spending more by borrowing more? No, we're not. Why not? because there are nearly 10 million vulnerable jobs in the UK at present. 2 million people are out of work. There are 5 million people still on furlough. There are around 2 million people who are still receiving support in self-employment. And there are, of course, the people who fell through the cracks as well. When more than 10 million people are in marginal and vulnerable situations with regard to their future employment, other people with jobs are not going to be reckless and start spending for fear that they too might lose their job in due course. So there's no reason to believe that people are going to go out and start spending in a big way. In fact, if anything, the pattern which we saw after 2008, which was that people kept saving for a long time, doing so in fact until 2016, is much more likely. But the government is assuming otherwise. They think that by 2022, net household saving will disappear. The chance of that is close to zero. If that's true, then there isn't a reason to think that inflation is coming for that reason either. Add those three factors together, no shortage of supply of goods and services. After all, the economy is actually capable of supplying much more than we are producing at present, and we know that because that was the trajectory for growth before the COVID hit. The fact that there are no wage increases in the pipeline and the fact that people are not going to spend their savings, put those together, and the chance of real inflation risk is incredibly low. Oh, one other thing. Is QE, or government deficit spending, financed by QE, going to mean that the UK is suddenly going to have a collapse in its exchange rate and a disaster with regard to the fact that other countries are going to suddenly realise that we're busted and they're not? No. Why not? Because they're all also doing QE. In fact, most countries are doing QE and deficit spending to a bigger degree than we are. There is therefore no risk to our currencies as a result. Bizarrely, the pound is riding high right now, despite the strength of the value of the oil, which we don't produce any longer. So, for all these reasons, inflation is a minimal risk in the economy. Let's put it aside. Let's move on. Let's stop wasting time discussing this, because there are better things to talk about with regard to the recovery that we need from coronavirus and how we build the sustainable future that we desperately require, and which those who promote the inflation fetish are trying to prevent because they dislike the idea of government intervening in the economy, and that is the motivation for their action, because they are saying the government cannot afford to spend because inflation might prevent it. Let's look through their very silly politics, understand what they're trying to do, and move on with the real world where inflation is very unlikely. Thanks for watching. If you're interested in what I've been saying in this video, please subscribe. There is a button below the viewing screen. If you're interested in what I have to say on Twitter, I'm at Richard J. Murphy on that medium. If you want to look at my blog, that's taxresearch.org.uk, and we have a Facebook page as well, Richard J. Murphy. So one of those things will get you more information on what this video series is about, and I hope I'll see you again soon.